Checking your portfolio daily is silently draining thousands of dollars from your net worth. By obsessing over red and green tickers, you are triggering emotional trades that destroy long term compound growth. History's most successful investors, like the quiet disciples of the index fund era, never look at their accounts. Today, I am pulling back the curtain on the exact three-step strategy that allows you to automate your wealth and ignore the market entirely. Ritual that will kill the urge to refresh your app forever. And this last method is the one that changed everything for me. Sit back, grab a cup of water, and let's get into it. Have you ever felt that sinking feeling when you open your brokerage app and see a sea of red numbers? Maybe you check it once in the morning, then again at lunch, and finally right before you go to sleep. It feels like being productive. It feels like you are staying on top of your financial future. But the reality is that your brain is hardwired to punish you for this habit. Let's start with the easy win: understanding the psychological trap of loss aversion. Research from the NBER or the National Bureau of Economic Research shows that the pain of losing money is roughly twice as intense as the pleasure of gaining an equal amount. This means that when you check your portfolio, you are statistically more likely to feel a spike of stress than a burst of joy, even if your account is technically doing fine. You aren't just looking at data. You are literally inducing a stress response that clouds your decision making. My friend David fell into this trap in 2022 when he started day trading his retirement savings. He checked his phone on average 12 times a day. In his mind, he was reacting to the market, but he was actually reacting to his own anxiety. He ended up selling his best performing assets during a minor dip simply because he couldn't stand the sight of a negative daily percentage. If he had simply closed his app and gone for a walk, he would be up over 30% today. That is the power of the easy win. Stop the feed, save the portfolio. Now, let's level up. This is where we look at the mechanism of volatility versus value. People often confuse the price of a stock with the health of a company. Imagine you own a house and every morning, a stranger stands on your lawn and shouts a new price for it. Sometimes they say it is worth $50,000 more, and sometimes they say it is worth $50,000 less. Do you run inside and try to sell your home based on the shout of a stranger? Of course not. You know the house is the same as it was yesterday. You understand that the market's opinion is just noise. Yet, when it comes to stocks, we treat that shouting stranger like an expert. A famous study by the SEC found that the average holding period for an individual stock has dropped from 8 years in the 1960s to less than 6 months today. This increase in velocity doesn't lead to higher returns. It leads to higher transaction costs and higher taxes. If you check your accounts constantly, you are subconsciously preparing your mind for a trade. You are looking for a reason to act. But in long-term investing, the most profitable action is almost always doing nothing. If you're finding this helpful, hit subscribe. I drop videos like this every week to help you master your money without the burnout. Okay, so we know the psychology is broken, and we know that daily prices are just noise. But what if I told you there is an even better way to protect your mental health and your wallet? Here is the one method that most people will never try, but it works better than any app notification or financial newsletter combined. It is the concept of the quarterly reset ritual. Instead of checking daily, you move to a strict 90-day cycle. On the first day of each new quarter, you open your accounts once. You look at your total, you log your progress in a simple spreadsheet, and then you close the app for the next 3 months. Think about the difference. Instead of dealing with 60 or 70 fluctuations per quarter, you deal with one. You aren't avoiding reality. You are viewing reality at the right scale. I started doing this in 2021, and my stress levels plummeted instantly. I stopped worrying about news cycles, political headlines, and sudden market corrections. I realized that my wealth was building in the background while I was busy living my actual life. The best part is that this forces you to focus on the things you can actually control. You stop worrying about stock prices and start focusing on your savings rate, your career growth, and your side income. Those variables move the needle much faster than any daily price action ever could. When you stop watching the ticker, you start watching your real bank account grow. Let that sink in. Once you see your investment journey as a multi-decade marathon rather than a series of daily sprints, you can't unsee it. That shift in perspective alone is worth more than the best market tip you will ever get. It protects you from the impulsive decisions that ruin the vast majority of retail investors. So, there you go. 3 real ways to take control of your financial focus, starting with the psychological reality of loss, moving through the noise of market fluctuations, and ending with the powerful quarterly reset ritual. If this helped you feel a little less anxious about your money today, like the video and subscribe so you don't miss the next one. I have a video coming out next week on how to automate your entire financial life, which is the perfect next step after you stop checking your app. Thanks for spending this time with me. It is a pleasure to help you navigate this journey. Take a deep breath. Your money is doing its job. Now go and do yours. We will see you in the next one.